We're going to be talking about how to get banks to give you as much money as you want at awesome terms.
If you want to learn how to work with a local bank to get the best possible terms on your refinance, stay tuned. So you have your rental property leased up, awesome, but how are you supposed to cash flow with that 12% hard money loan?
Let's get rid of that thing.
Maybe you have a private money lender that is expecting his money back plus interest in the near future. Or maybe you use your hard-earned cash to buy and rehab the property and just want to replenish those funds. Now it's time to finance your property for the long term.
You got the house leased up, it's in great shape, you got a great tenant in the house, and now we got to go to refinance it. What do you usually do at that point, Lucas?
Yeah, so I talked to a local bank, and we usually have 3 local banks that would refinance each of our deals, and we just figure out which would be best suited for that bank. So I send an email to the bank, and they usually look over the investment property and figure out if it's a right deal for them.
Cool. So how do you decide which bank you're going to send it to?
Well, each of these banks have guidance limits that we are bumping up against because we have a lot of rental properties.
I got you.
So we try to stay below their guidance limits and let everybody have a turn and just kind of cycle them that way.
So what's the process? Once you send an email and you kind of get approved or whatever, you've probably already built a relationship with these guys up front.
Yeah, and we can talk about building that relationship here soon, but yeah, so as soon as the loan gets soft approved up front, the loan originator will schedule an appraisal, and then they'll have to come out and appraise the property, and usually that bank will give you 75 to 80% of that appraised value.
So do you got any tips for, so the bank says they're going to send out an appraiser. That appraiser generally calls you to get access to the house?
They do, and I tell them what I purchased the property for, what I spent on our rehab, and then I also meet that appraiser at the house. I meet them there with comps of what I think the property's worth, or to show what I think the property's worth, and also a dollar figure attached to every rehab item in that house.
Yeah. Do you find that appraisers are generally really receptive to that, or do you get any feedback from them one way or another?
Well, I mean, this whole game is a relationship game, so if you can't talk to an appraiser, you're probably not going to be very good at real estate investing. But I do preface it with, I know you can pull your own comps,
yeah,
but these are a few that I came up with that I thought would be helpful.
That's good, because I find that in general, I don't know, most appraisers don't want to be told how to do their job. But if you can just kind of softly say, hey, this is kind of what I think. I know it's you got to come up with whatever you think, and I'm not trying to tell you how to do your job, but this is kind of what I think, and then justify that with some comps and with all the work that you did to the house.
Absolutely, and you would know that being a former appraiser.
You're right. I was an appraiser for 8 years, and I was attempted to be influenced a lot by a lot of homeowners.
You wouldn't let them push you around, would you?
Well, the ones that were, I found that the ones that were like really telling you what to do and standoffish and stuff, I kind of like pushed back on them. And every appraiser, appraising's an art. It's not a science. It's
right.
Not like, an appraiser's going to punch a bunch of numbers in and spit out that number.
Right.
There's always a range.
Yep.
You send 10 appraisers out to do an appraisal on a house, you're going to get 10 different numbers.
Exactly, and that's a great point, because when you're doing a cash out refinance, you don't have a purchase price that they can attach their appraisal to. So you need to be more specific with what you want to have that price to be appraised at, or that house to be appraised at.
And I found when I was an appraiser, and I got a lot of appraisal friends, an appraiser likes to have a target to shoot for.
Right.
So if you give them what you want the number to be, and as long as you're realistic and have good, it makes sense, I find appraisers generally want to help you.
I agree. Yep, I agree.
So Lucas, when you're refinancing houses out on the back end, you're generally doing it with local banks. And
yes.
I've heard you say before, it's really important to build a relationship with those banks. So how do you go about doing that?
Yeah, so first of all, it is a relationship. Just like any other relationship, it takes time and commitment to develop and maintain that relationship. It took us about 20 different banks that we came into contact with before one of them gave us a chance. So I would suggest reaching out to your local real estate investment groups or your local Facebook investing groups and see what other investors have done that you're trying to do something similar, and see what banks they're using.
I agree with that, banks, because it's really important to My experience with, there's a lot of local banks in most metro areas. There's some local banks in that area that love doing this type of financing on single-family rentals or multifamily rentals, and they just love to have that in their portfolio. And there's other banks that don't want to do that kind of business. And if you don't know which ones to go to, but that kind of helps you weed out which ones are the ones that are, you know, interested in this type of financing versus ones that aren't, by reaching out to other people in the market.
Absolutely, that'll shorten your time frame tremendously. We were in the middle of our rehab on our first investment property, and we were just scrambling, talking to any bank around the metro area. So to shorten that time frame would be huge to any investor. I think it's also important to be super professional and have a plan and goals, and document those plans and goals. Make it look professional, and get a one-on-one with that banker if possible, and show them that you're for real and you mean business. We develop something like this almost every year to talk through with our bankers, and they really enjoy it.
Awesome. And I think that's great. I'd love to see what's all in there. Maybe we can post that somewhere on here. But so getting to know your banker, and I don't know, if you go to the local bank, there's probably several different loan officers in there. Is there any particular one that you try to find at the bank, or any? How do you decide who to go in and talk to at the bank?
That's a great question. Most of these local banks have a commercial lending department, and all of our notes and properties are owned by our LLC. So it's a cash out refinance commercial loan. So we try to talk to the vice president of the commercial loan department, or hey, if we can go straight to the CEO of the bank or the owner, we go there.
As high as you can get on the food chain, as high as that allow you to get
exactly
in the commercial lending department.
Yes.
Yeah, that makes sense. That makes sense. What are the terms that you're typically looking for or getting from your banks these days?
Yeah, so right now in this market, it's typically between 5 and 6% interest rate, amortized over 20 to 25 years with a 3-year ARM. And an ARM stands for adjustable rate mortgage.
So that just means that the loan is locked, the interest rate is locked for 3 years. When that 3 years is up, what do you got to do?
Yeah, that interest rate is going to change.
It's going to change.
No matter up or down.
And the bank decides how much that is going to change?
And the bank decides how much it's going to change, and it kind of depends on where you're at in the market.
Yeah, what the rate of the day is with interest rates and stuff.
So you just have to renew the loan at that point at your new interest rate.
And how do you find the renewal process? Is it challenging at all?
Not really, but mainly that's because we've been in an appreciating good market. So I've heard the renewal processes were a lot difficult back in 08 through 2012.
They were a little more challenging back then. We're in a great environment right now, but if possible, it's always better to lock it in a longer term if possible.
Absolutely.
Maybe, you know, in general, the local banks are going to want to do a 3-year term. That's just generally what they look for. But, you know, it's all negotiable, you know. It's all about building that relationship too.
Exactly, agree with that 100%. As Brian said, at this point of the market, we want to lock those interest rates in as long as possible, and how long that you're able to lock those in is based on how good of a relationship you have with that banker.
Yeah. So the terms come down to your interest rate and your amortization period.
Correct.
Amortization period just means how long is it going to take for that loan to be paid off?
Correct.
You know, and typical is like 15 years, 20 years, 25 years, or 30 years.
Yep, exactly.
And the longer the amortization rate is, it's longer to pay it off, but it's also less how much you have to pay today. So a longer amortization rate gives you better cash flow today.
Correct. Yeah. So how we like to set up our loans are stretch out that amortization as long as possible, which gives us more cash flow, and that gives us more flexibility in what we do with that extra cash flow. So if you have a bad maintenance month, maybe you choose to keep that extra cash flow. But if you have a great month with zero maintenance or something like that, and you choose to plow that extra cash flow back into principal pay down, you can. It just gives you that extra flexibility.
That's awesome. And in general, Lucas, what's your plans financing wise long term? Are you trying to get yours paid off? Are you trying to just let them ride, let the tenants pay them off, or what's your philosophy there?
That's a great question. Right now, I'm just trying to get. I'm in growth mode, so I'm just trying to get the best terms over the longest amortization as possible with the best cash flow, and then I'll figure out how to pay them off later.
That's good, and it's good to think about that because you're clearly in growth mode. So you're just trying to get best cash flow and continue to grow and get as many deals as possible. Somebody else maybe at a different point in their life where they're just focusing on getting them all paid off or something.
And that's pretty much where you're at with your portfolio.
That is where we're at the moment.
Love it.
You know, so it's all good. Either way, you just got to figure out what your goals are and follow that.
Yep. Cash flow is king. Cash flow is the most important part of any rental business, especially a new rental business. Now I'm going to show you an example on how to optimize or increase your cash flow on a refinance. Say you have a $100,000 loan at 5% interest rate. Say your choices are to amortize this loan over 20 or 25 years. Let me show you the example in cash flow if you do both. So, for over 20 years, your monthly payment will be $660. Over 25 years, your monthly payment is only $585. That's a difference or delta of $75 a month. So this one property with one difference in your loan terms gives you $75 a month extra cash flow. Imagine if you had 20, 30, 40, 50 properties, the power that can do for you. So we do all of our loans in our LLC name with a local portfolio lending bank, but there's other ways to do it. Putting those properties in your personal name and going out to national lenders. Brian, can you tell us a little bit about that?
Sure. And when you buy your personal house, most people just go to a mortgage broker and they get really good terms, and it's the loan is a fixed term for 30 years, either 15 or 30. Most people go with 30 years, and you're going to get your best cash flow on your 30 years. So by doing that, those loans are being sold to either Fannie Mae or Freddie Mac, you know, and right now, and these change every once in a while, but right now, any person can get 10 loans with Fannie Mae or Freddie Mac. And if you're married, you know, you could potentially do 10 in the husband's name and 10 in the wife's name, assuming that you both have jobs and got good income and so forth. So those are some of the best loans available. Primarily because the interest rate is as good as you're going to get. They're awesome. Like right now, I think you can get in the 4s.
Yeah.
And then the other thing is, it's a 30-year amortization, and that loan is fixed. That interest rate is fixed for 30 years, and who knows where interest rates are going to be 10, 15, 20 years from now. So that's the power of those. The only downside to those is you gotta have those in your personal name. And what most people do is they buy the house doing the BRRRR method. They buy it in their personal name. They'll fix it up. They'll get it rented. And when they go to refinance it, they'll refinance the house and get that loan in their personal name. And then after the loan is closed and all done, they just quit claim the property into their LLC. And that's all fine and dandy. There is a due on sale clause in most loans that says that if you quit claim it from your personal, if you change the name of the person that owns the property at all, whether it's just quit claiming it from your personal name to an LLC or selling it to anybody, that lender can make that loan due on. They can call that note, but I've been doing this business for a long time and I've never known that to happen. So I think in general, lenders are fine with it as long as you're making your payments, you know? So
make your payments.
Make your payments. I agree with that. So Lucas, there's some investors I've heard that want to, their goal is to get the houses paid off as fast as possible, and they use a really short amortization period.
Yes.
And some want to have more of the flexibility, you know, as they keep the amortization period as long as possible to keep that cash flow down.
Right.
You got any feedback on how to do that, or what do you prefer?
Yeah, I prefer the cash flow because we run our rental business as a business, and we need that cash flow to survive and pay overheads. But maybe if your rental portfolio was strictly for investment or maybe retirement, and the goal was to pay them off quickly to live off that on your retirement, I think that's a great option, especially if you have some other active income to live off of while you're paying your properties down.
I think that's the key. To people that want to put them on a shorter term amortization, get them paid off quickly, is is you have a job or some kind of active income where you got plenty of money coming in to live on, and you're not trying to live off of your rental properties.
Right.
I think that's really the differentiator in my mind.
Absolutely.
But in general, I like to keep the amortization period as long as possible because I can always pay extra if I want to.
Exactly.
But if your amortization is short and you can't pay less than what the bank wants.
Don't try it. They won't let you.
Whoa. Your choices are to amortize that loan.
He's got the C-minus on an amortization.
Yeah, that's a tough word. I spell it wrong too, so that's why what makes it hard for me. Say your choices are to amortize. Wow. Say your choices are to amortize.
Amortize.
Amortize